So again, the 11-hour option spread strategy. Really quickly, we want you to know that any questions that come up during the webinar, please feel free to go ahead and submit them as they come up, as they pop into your mind. I'll try to answer them if it's along with the same flow of what I'm doing. If not, or if it's going to be answered in a later part of the workshop, I will answer it then. At the end, what I'm going to do is try to have a final wrap-up Q&A session. Okay? So one other thing too. Please keep in mind that there are multiple levels of experience of all the traders in the room. Now, what I intend to do is this. I don't want to necessarily handle all the basic questions regarding spreads and options during the formal presentation of the workshop. That gives our experienced traders a coherent view of what's going on. Okay? But what I intend to do is go through the information, go through the checklist, go through the examples, and then go through the live examples when we're actually looking at individual stocks. And then we'll have a final Q&A session. In that final Q&A session, I will try to answer any questions some of our newer traders to options. If you're asked questions about options, which ones do I use, what's a spread, all those kind of things, I'll be happy to address it then. The most important thing is I want to make sure everything kind of flows and that it works out well. Hi, Linda. I'm glad you got in. I just want to make sure everything's okay now and that you can hear me okay. Okay, well, I'm glad. I'm sorry for the difficulty you may have had. All right, so so again, that's the kind of the flow. That way we could accommodate our more experienced traders and then also make sure that our newer traders are taken care of. Okay? All right. Those of you that are still new to microquant and maybe not in a trading room yet, a little bit about me. There's my picture. I am a graduate of Vanderbilt University, the national champion team of NCAA Division I baseball this year. Very proud of that. I was a full broker at Merrill Lynch at age 23. After that, I worked at the Vanguard Group Mutual Fund Company, but I worked in the asset management service. This is the only service at Vanguard that people actually pay for directly, and I was a senior advisor there in charge of appreciated securities. That's why when clients would bring in stocks and highly appreciated company stock, I would help generate not only tax loss harvesting strategies, but cash flow strategies utilizing options against those stocks. So it was very interesting, a lot of background in stocks and options, and put it to good use in this trading room. I've been in this trading room for over 16 months. We trade every single trading day, and we do quite well. And in the experiences we've had in the trading room with our traders and the markets, we've come up with some good strategies, this 11-hour option strategy being the most recent one. Now, I haven't had this in a while. This is me in a less formal setting. These are my those are my screens behind me. That's where I'm talking to you from. Live outside of Philadelphia, Pennsylvania. My kids are now 13. I'm a master scuba diver as well as an assistant diving instructor. As my kids have grown up, I've really enjoyed coaching them in all sorts of sports and things like that. We're very much interested in school. My kids are gifted, so we do a lot of band and all that kind of stuff. So as you can see, I love the markets, I love my family, and hopefully get to spend some time in retirement sometime in the future, scuba diving again. All right, quick risk disclaimer. I cannot promise you will make boatloads and boatloads of money, but what I can do is this. Make sure that you understand that trading or investing carries a risk. Okay, you should know your limits, you should know your investment objectives, and know your ability to tolerate risk. Okay, the sole purpose of this information is for education and assistance in helping you make your own independent investment decisions. Now, we've taken reasonable measures to make sure that everything we've shown you is accurate, but we can't guarantee the results that may come from directly or indirectly from utilization of that information. Any past performance results are shown for illustration and example only. Okay, there are limitations to what we can show you on the screen. So please note that any past performance is not necessarily indicative of future results. Thank you, guys. Don't worry, you didn't miss much. This is the risk disclaimer and my pretty face. Hold on. There we go. Thank you for yelling at me. Okay. Sorry, I was making sure everybody was in the room and I forgot to double check that we were rolling. All right. All right, so anyway, that's the first risk disclaimer. This is the second, the CFTC Rule 4.41. The Commodities and Futures Trading Commission wants you to know that futures and options have potential risk and reward. Said, just don't trade with money you can't afford to lose. This is not a solicitation or an offer to buy or sell securities, stocks, or options. We want you to know that past performance of any trading system is not necessarily indicative of future results. Okay? How big are those screens behind me, Bill? These are, 24-inch. Oops. Sorry. 24-inch screens. I actually have 6 of them now. All right, so let's just jump into it, okay? First of all, I'm going to tell you what I'm going to tell you. This is the 11-hour spread strategy summary. For those of you that have been in a couple of my credit spread workshops, please pay attention to this color. Oops. Okay, the light brown. These are the ones that are a little bit different from what we normally do. So make sure you understand that. Okay? But basically the strategy involves an optimized way of selling credit spreads on a very short time scale. Okay? The profits that we generate come primarily from overnight theta decay. All right? Overnight theta decay. The time frame that we are trading, it is the last 11 hours that a weekly option has until expiration. The last 11 hours. Okay? Now, someone's going to ask me, is it exactly 11 hours? Can it be 12? Can it be 10? Yes. That's the last time I'm going to put personal picture on there. I get teased by my traders. Just kidding. All right, next part of the summary. The selection of the stocks and the trading opportunities is based on the 60-minute chart. All right? And the driving force is the momentum trend. Okay? Now, those of you that have done credit spreads with me before, you know I like to have various levels of protection, whether it be the setup, the price action setup, an EMA level, maybe a voodoo line, maybe a daily high and low. But what we're trying to do is have at least one of these in place on this more aggressive shorter term trade. Okay? Now, as a bonus, what we're going to try to do is go in the same direction as the daily chart. See, we're primarily trading on a 60-minute. But if we can go in the same direction of the daily, that's an extra bonus. Okay? We try to do that. All right, risk management, very important aspect of what we're trying to do. Okay, for active traders that are in the market at the open on Friday, we want to use what I call firm mental stops. That means you don't necessarily put it into the system, but you better be sitting there at the open. Okay, if you're what I call a set it and forget it trader, because that is one aspect of this strategy you can do. you better put the formal stops in as soon as you put the trade on and you get filled. Okay? The max loss that I'm willing to take on these credit spreads is 2 to 3 times the maximum gain. I'll get into that a little bit later, but 2 to 3 times the maximum gain. Right? We take an active management onto the Friday morning open. You need to do that. Now, if you're a set it and forget it trader, don't worry about it. If it moves against you, you'll get stopped out, and then it'll be into the next week. All right? Because every once in a while, maybe 1 out of 3 times, you'll get a small gap that may move against you. I call this the last stab. Okay? But what we're trying to do, because we're actively managing, watch for a run in the opposite direction. It doesn't normally happen, but it is possible. That's when you're most likely to get stopped out. Okay? Now keep in mind, this is Friday. So this is the last day we have to trade. Now when we are watching this, we are letting the stock move in the opening 30 minutes. We want to mark down the high and low prices in the underlying stock, and we're going to watch for breakouts. Don't worry, this is just the summary. We'll get into it. I just want to kind of show you what I'm going to show you. Okay? And then the exit strategy is nothing more than hold on for expiration. You want to get the maximum amount of money out of these trades as you can. All right? If you're a set it and forget it trader, that's the way you're going to end it anyway. You have your stop in, and then you see what happens at expiration. Okay? Cool. All right, any questions on that summary? It is pretty straightforward. All right, so let's go ahead and just move right into it. All right? Again, the strategy, the 11-hour strategy, is an optimized credit spread selling strategy. Okay? Again, focus on the 60-minute chart. That is the primary driving chart. Okay? But it's okay to use the daily as a backup, as a longer term time frame to help you say, hey, look, daily's going up. The 60-minute opportunity is also up. All right? The most important factor you need to look at is momentum. This, because a momentum move that is strong enough from Thursday going into Friday is very likely to continue. Okay? And at least if it's bullish at the end of the day on Thursday, we're more likely to continue that move on Friday, even if we gap lower. Okay? A bullish move. You can have a gap at Friday's open, but the momentum from Thursday lots of times carries into Friday. Now, here's the most important thing. We implement this on Thursday, right? Thursday after the morning active session. Okay, those of you that are in the trading room, this is when we normally trade intraday. When the market starts to slow down between 11:30 and 12:30, right around noon, that is when you start looking for these opportunities, because we're past that active session. I'll go into more about that later. We're going to utilize the MQ momentum indicator, and if you don't have that, maybe use MACD. It's a momentum indicator that we use to confirm the direction that we are moving on the 60-minute chart. I know I'm repeating myself a lot, but it's okay, because a lot of it needs to be repeated, because these are the firm exact steps. What MACD setting? It depends on whatever you use. It's non-specific. If you don't know what you use the default. What particular time to stick with? 12, 1, 2, 3, 12 o'clock. If you need an exact number, 12 o'clock. I can say from 11:30 to 12:30. That's a general range. Stochastic's okay. Whatever you use to read momentum, you need to read momentum. Not oversold or overbought. That's not momentum. Okay? All right. So the next things we're going to do is use what I call a price action setup. That means the way the bars look, way the bars are moving. We're going to look for a divergence or a channel breakout that's either bullish or bearish. I'll show you exactly what I mean later, but that's one thing I'm looking for. I'm also looking for an EMA or an SMA, maybe from the daily chart, that's providing a level of protection. I'll show you that also too. Okay? But I am going to also use a 5-minute chart to help me with my entry trade. I will show you exactly what that means too. I don't just say, hey, 12 o'clock, jump in. I'll say, hey, 12 o'clock, let's look for a trade. What has the chart done so far on the 5-minute chart? What has the stock done so far today? That is correct, Michael, but that is a different strategy. Michael's asking me, don't I do Tuesday credit spreads like at 3 o'clock? I said, yes, I do. But this is a different strategy. This is an 11-hour strategy that runs on Thursday at noon. Okay? All right, don't worry if you can't get it all at one time, or like, I really don't know how this kind of all fits together, but should be okay. Guys, give me 1 second, all right? I don't know why some people are not getting... Okay, sorry about that. All right, so we're going to use a 5-minute chart to help us with the entry trade. Again, I am just telling you again. I will show you in the steps. It's a checklist that we have. All right? The next thing I want to do is describe why the most important aspect of this trade, the Greek that is most important, is theta, time decay. I call it the payout Greek, also known as show me the money. Okay? That's what's most important here. Theta, again, is an aspect of the price of the option. That's why we call it a Greek. It's part of a formula that describes the rate at which a decaying asset, and in this case, the out-of-the-money option spread that we sold, the rate at which that asset decays as it approaches expiration. Remember how long do we have till expiration? 11 hours. Okay? So what you are taking advantage of is a geometrically accelerating decline. Theta has been this option has been decaying since it was created. But when it approaches zero on a weekly chart, it's really what we call a geometrically accelerating decline. It's like exponential, but in the, going down. In a weekly option, the steepest drop in premium is in the last 1.5 days. That is the last 11 hours. So you can basically break this down into 3 different periods. 1/2 day, 1/2 day, 1/2 day. That creates the last 11 hours. All right? But understand, this is what drives money. Okay? This is what makes it profitable. Right? The overnight theta decay between Thursday and Friday is the primary profit driving force. Yes, you can make money Thursday afternoon, and yes, you can make money Friday afternoon, but the transition from Thursday to Friday is usually the greatest rate of theta decay. As long as the price is not overly volatile. I'm talking about if it's plus or minus 1%, the way we do this, that is not going to make a difference. Okay? It's going to matter if it's plus or minus 10%, but as long as the price is not volatile, you're okay. The option premium should decline significantly at the open. All right? These are the 3 periods of time I was talking about earlier. Give me 1 second, folks. making sure there's no questions as we come. These are the 3 periods I want you to be aware of. Thursday afternoon, noon to 4 p.m. Next period, Friday morning, 9:30 to 12 p.m. And then Friday afternoon, 12 to 4. Okay? At the Friday opening, even when price is maybe moving towards our short strike, when that price actually stops, usually there's a significant drop in the option value, okay? Because the price of the option spread, price is the reflection of a trader's expectations, okay? It's not some sort of mathematical calculation. Humans are actually buying and selling these options and driving buying and selling decisions. So if we have a bearish call credit spread and I have my short strike here and I want the price of Apple to stay below that, okay, here's Thursday, and then the next morning we gap up higher and we start to run and we go like this. Well, my position will start to lose money right here, but as we come up, maybe make a double top and start to fall, here the trader's expectations start to fall, so that the value of our trade actually starts to increase, even though it did move against us, even though it is still higher. Okay, you have to learn how to manage the gap, and I'll talk about that also, because it is going to happen once in a while. Now, if we're on the other hand, if this is the short-term stop and then we're going like this, and then the next day we're just falling, then you're going to make money anyway. Okay? Sorry. So those are the 3 time periods. Don't freak out if the Friday opening is a little bit against you, because what's going to happen is when it does finally stop, then the price will rapidly drop. Okay? Hopefully I'm not losing too many people. This is theta decay on a chart. All right. Let's say this is 12. This is Thursday AM. Okay, this is for Thursday AM right here. That's the morning period. Here's 12 o'clock. All right, that's 12. So this is Thursday afternoon. This is the time between Thursday and Friday. Here is Friday AM. And this is PM. Okay? So right here, the transition between Thursday and Friday, that's when a good amount of theta is lost. So the value of the option actually decreases a lot. That's important because it's something that we sold. I don't want to get into that specific, but it's going our way. If the stock behaves like it's supposed to, it'll drop a lot. If it behaves counter to what we're expecting, it can go a little bit against us, but once it stops that opening move, then it can really start to drop in value. That's what I'm trying to point out, that you understand that theta decay is working rapidly in your favor, and that's the primary driver of the trade. All right? So, again, to recap one more time, the strategy is based on selling at noon on Thursday and holding it until the 4 p.m. close in the 3 major periods. Okay?
It's 81 degrees.
Yes, Bill. That Y is the value of the option. Okay? It's something that we sold, so that we're still on the hook for it, but the value of what we're on the hook for is depreciating. So when we get here, we're on the hook for nothing. So we sold it for $5 here, but here by the end of the day on Friday, it's worth 0. So nothing wrong with selling something for $5 and not having to pay them back. Okay? So again, it is based on a 60-minute chart. We want to monitor momentum, and then we are looking for overnight income. It's a quick move. All right? Profits again come from theta. the value of the option going from Thursday to Friday, and then there's the rapid decay on Friday itself. We're going to try to get 4 to 8%. What happens if we get 4 and we stay at 4? As long as you can consistently earn, it's not a bad deal. All right? We're going to limit our risk. Now, because normally, if you guys know my credit spread strategy, it's usually more conservative, like 2. We're willing to take a little bit more risk because the options, we're closer to the short strike and the price might move around a little bit more. What's more important is a close watch on the price action on Friday morning. That's usually when you'll have the trouble. All right, those of you that are still new to credit spreads, you just realize that most of the time you see a stock going up and you say, oh wow, that stock is going up, I want to buy, right? No, that's how you normally trade it. When you see the stock going up like this and you're a seller, you're thinking, okay, the stock is going this way. Where's the stock not going to be? Where is it likely not going to be? It's probably not going to be down here in a couple of days. That's where you want to sell. Okay, that's where you want to sell. You want to sell this to somebody because the price is going this way. The more we move away from where you sold, the more money you will have. Okay? It's a higher probability type of trade than just sitting here and buying an option. Okay? I can talk more about that later. What happens if there's a news event on Friday morning? You're going to get stopped out. Pretty straightforward. It depends. I've seen bad news come and the stock doesn't do anything. It just depends on the reaction. All right? Any questions so far? It really is a straightforward type of strategy. What is driving profits? Time. Which direction does time go? Forward. If you have something that's depreciating and it's wasting away, if I'm selling it to somebody, as time passes, I become richer. Okay? All right, here's the step-by-step plan for those of you that want to. And here's the one trick, everybody. If someone's like, can I have a slide on this? Or can I have copies of the slide? My suggestion is go back through the video and take a screenshot of each slide that I show you. It will be in color. But what's nice is you take that screenshot, put it into Microsoft Word, and then you can type right under it exactly what I'm saying in your own words, or the important points. It's a very, very customized type of thing for you to do. All right? SWE, I will go into that. That is a very important part. Question was, what if there's a gap on Friday? I have an entire slide dealing with the gap. No, I do not roll my positions, Jay. Okay. So we'll just go ahead and start going. Sounds like everybody's still okay. All right. So the 11-hour option spread strategy, step 1. Look at a 60-minute chart. Thursday, 12 noon. That's very straightforward. Look at a 60-minute chart. You can look at a number of different stocks. I'll show you the ones I do. But look at a 60-minute chart. Thursday, 12 noon. I will be looking at my chart for my momentum direction. Look at your momentum indicator. I want to know which direction is it going. Is it going up or is it going down? And I want to know, did it just start or has it been running strong in that direction for a while? I want to know its strength. You should be able, if you use momentum a lot, you should be able to gauge that. Okay? Now, for us in the trading room, we're using our MQ momentum indicator. If you don't have that, you can use MACD. Honestly, I don't know very many other momentum indicators because this is the one I use. I have no interest in learning other momentum indicators. One is enough. I also have the squeeze indicator. Those of you that know my trading style, I can look at the histogram to see which direction it's going. Yeah, TTM squeeze, same thing. I use a version of it called the BB squeeze. Okay, that's a Bollinger Band squeeze histogram. Trade the Markets did not create the squeeze; they just use it. It was mainly put on the Bollinger Band. Someone stuck Keltner channels on the Bollinger Band one time, and they said, "Look, it's squeezing here." Okay, Trade the Markets kind of optimized it and put their name on it. I use the free version on TradeStation. But I'm looking at this histogram. It's my secondary momentum indicator. I'm checking it for direction. Again, which direction is momentum going? Now, when I know that, and I say, okay, we're either going up or we're going down. And you'll say, well, what happens if you're going sideways? Don't trade that. Don't trade that stock. If you can't gauge a direction, say, okay, next. Look at the next stock. All right? Now, here's a bonus. If the stock on the 60-minute chart is going one way, take a quick peek at the daily. Is the daily going in the same direction? Okay, is it? If it is, good, bonus, extra points. Put a star beside that one. Okay, if I'm going up in Apple on a 60-minute chart, and then on the daily it's going up also with momentum, that's what I want to look at. Okay? No, I don't do iron condors on sideways charts. Because most of the time stocks either go up or down or sideways. I can read up or down. Sideways can break against me. Up, it takes a while to turn around. Down, it takes a while to turn around. Sideways, it just takes a nudge to break lower or higher. Okay, I want a stock that's moving. All right, so here we go. This is a 60-minute chart of Apple. I'm going to show you. I've told you, look at a 60-minute chart at 12 p.m. on Thursday. This is not necessarily the case, but let's just say, hey, this is where we are, 12 p.m. on Thursday. The next thing I do is look which direction momentum is going. Here's my MQ momentum indicator. Okay? My bars are red. My bars are red and they are increasing. So which way is momentum going? It's going down. All right? I'm looking at my BB squeeze indicator. Which way are the histogram bars going? They're going down. Yes, thank you very much, Andrew. So, question. Which direction am I most likely to trade my 11-hour options in Apple? Down. Okay? That's the first step. And then I can look at the daily, and the daily showing, oh, it's going down also. So, that's good. I have a direction in Apple, down. That's the first step. Very simple. Okay? All right, the next step, and I kind of did part of it, I'm looking at the last 2 to 3 days, 20 bars. Again, this is the 60-minute. Okay? 60-minute. That's exactly what we looked at here. Okay, 60-minute. You can count, but here, this is 2 days. Here's 3 days. All right? You can see it moved up. Now it's moving down. I want to know what it's done and what it's doing now. Okay? Now what I'm doing is I'm looking at what I call the price action. I'm looking for obvious type of setups. I'm looking for divergences, either higher or lower. I'm looking for a double top or a double bottom. And I'm looking for potential channel breakouts. Not one that may happen, like you were saying. Who's that, Michael? Michael was saying maybe if it's going sideways, we could do an iron condor. No, I want to see a breakout. I want to see it moving either lower or higher. I don't care. If it's not moving up or down, I don't want it. Okay, I can be picky. And I want to see a change in momentum, meaning that momentum is not just going sideways. I want momentum to really push one way or the other. Okay? I want something that is moving. Again, let's just look at this. Here, Apple is the same chart. Here's 3 days worth. Okay? So let's just see. We have one high here, one high here, one high here. Ooh, we tried to come up here. Look at this. This is the first high. Here, look at my momentum. Here, oh, this high here. This is the one just an hour ago. Oh, look at this. Okay? Whereas we tried to go back up, you see there's no green? There's no green here. So that is a bearish divergence. Remember, I'm looking for a potential divergence. There we go. If you're looking at it, you can say, well, you know, this is kind of like a double top. Here's one top, here's two tops. That's a double top. And which way is momentum going? Momentum is going down. This bar is getting longer. Okay? So we have a bearish divergence and we have momentum going down. Oops. All right? So we have a double top and a divergence, momentum, change in momentum. Now, I'm going to clear this out just a little bit. Okay, do you see when I say change in momentum, do you see how this bar is actually getting longer to the downside? It's longer than the previous one. Again, this is the divergence. Here's one, here's here. Here's one momentum picture. Here's another momentum picture. Okay, do you see this is like a double top, 1 and 2. That's kind of what I'm looking for. Okay, I want a setup, a price action setup. You can, if you have value charts, you could use value bars to see that. It's a divergence, it's going down. So what I'm thinking is the fact is Apple is going lower. What's the squeeze doing? What's important is here on the histogram bars, I don't use the squeeze per se like you traditionally do, but I'm looking at the tops of the bars. Here, here, here. Notice which direction they're going? They're getting shorter, aren't they? To me, the histogram is going down. I know it's green. It doesn't matter to me. The histogram is going down. I'm looking at the height of the bars. Okay, so it's going down. That's what I want to see. Right? And then change in momentum. Momentum is changing. It is increasing to the downside. I don't like it when the momentum just sits here and doesn't go anywhere. I want it to go down. Okay? So the next step that I'm going to do, so all these things have been checked off. This is good. Looking at the last 20 bars, there's a change in momentum. And on the chart itself, we are going down in Apple. All right? That's what I'm looking for. That's the way I want to play it. Now, those of you that are familiar with the setup of writing credit spreads, what we want to do is remember, if this is going down, where do I think prices will not be? Someplace up here. Okay, right? If this is going down over the next 10 bars, 11 bars, if this is going down, this is where I want to write my credit spread. Yes, a bearish call. Now, those of you that are not familiar with spreads, I can answer that later. But this price level, let's say at 100 or 105, okay? Oh, sorry, running out of space. 105. This is where I want to write my credit spread. 105 to 1, something like that. 105 to 100 to 105, something like that. So right in here, because I feel like this price is going to move away from it. Okay, that's how I select it. Now, what we're doing when we have the direction, we want to look to put our short strike at where we have active protection. Okay, did the price action set up an obvious support and resistance level? Okay, is there a daily EMA maybe we've crossed on the 60-minute chart? Voodoo lines. Are voodoo lines in play? Do they help? I'll show you what voodoo lines are. They're actually basically, we use them as support and resistance levels. And then, is there a daily high or daily low that we can use to create highs and lows? Now, here's one tip. If you're looking for the daily high on a 60-minute chart, it's going to be, chances are, going to be caught anywhere already with when we're looking at other support and resistance levels. I'll show you. Here's Google. Okay, we look back. Okay, let's go through our criteria. It might be kind of repetitive, but 60-minute chart. All right. The price. Oh, let me see my steps. Sorry. See, I still have to, because I do it like I already know it in my head. That I kind of goes through it too fast. Okay, look at a 60-minute chart. I'm watching momentum. Which direction is momentum going? Momentum is going down. Bars are red. This indicator line is negatively sloped. So we're bearish on that. We're going to do a double check on the squeeze histogram. Look at the squeeze bars. Which direction are they going in? They're increasing in length to the downside. So momentum is carrying us down. The daily, let me just tell you, daily is also going down. No problem. This is actually from today. We're reviewing the last 20 bars of the stock option, of the stock. So here you had one bottom, two bottoms. We look like we're about to break lower here. Momentum's going down. Look about to break lower. We have this previous high here and this previous high. So you have a series of lower highs and lower lows. Okay, we don't necessarily have a double top, but what we do is we are looking for a change in momentum, and then now we're looking for active protection. All right, if this is going lower, we want to write our credit spread up here. Now we have this previous high that creates a resistance level. We have this previous high that creates a resistance level. We have this voodoo line at 601.87. That's a resistance level. And we actually have a resistance level from back here, really around 606. Now, we think this is going to go lower. Where should we write our credit spread? I think it might be a good idea to try to do it 605 to 610, saying that the price of Google will stay away from this area right here for the next 11 bars, because this is going down. That's how we do it. We are looking for active support and resistance levels. Here, voodoo line. Also, let me erase this because there's some more stuff to show you. Do you see the 8-period moving average here, the 21-period moving average, the 50-period moving average? Now, these are hourly bars, but there are the moving averages. If this needs to go and break higher, it actually has to go through all those EMAs. Also, shouldn't I look for a bottom target for a bounce or a reversion back up? Yes, I mean, that's a good point. You could always look like, okay, if we're going lower, where might we find some support? And I think this voodoo level right here is a reasonable support level. Plus the fact that we may have some other daily levels. But in essence, because our time limit is so tight, we are only talking about 10 bars. This momentum picture should carry us lower. You have to remember, when we are writing a credit spread up here, we're already distant from the current price, which is here. We already have price separation. I don't care if the price goes straight sideways for the next 11 hours. I really don't care. Here, let me erase it again. That's a good question for someone that might be a little bit new. All right? We think that the price is going to go lower. Do we make money? Yes. Okay, because this expires worthless up here. So this is where our credit spread is. What happens if we go sideways for the next 11 bars? Yep, we make money. What happens if we do this, guys? What happens if we go up? Do we make money? Yes, we make money, as long as it doesn't go goes straight through. That's when we lose money, and that is not good. That's why a credit spread is a very high probability trade, because not only do you have the price separation, but the fact is you actually have time working on your side. Because even if tomorrow morning it starts to move against you, if it moves slowly enough, it'll never reach your short strike. And if it never reaches your short strike before expiration in 11 hours, you keep all your money. Okay? Well, EMAs can be any EMA that you normally use. On the 60-minute chart, I use an 8, a 21, and a 50, just like I use on a daily. it's almost a little bit less important here. But I like to keep them on there. Yes, you can get enough commissions, James. All right, let me go ahead and continue because I want to work through these steps. So again, this step 3 is looking for active protection. Various support and resistance levels to protect how prices are moving. How prices are moving away from the short strike. Okay, I want as much stuff between right here and this in this price area. I want all that protection so that the price cannot go through my short strike. Okay, think of it as football players. This is all my defensive line. This is my quarterback right here. Stay away from my quarterback. So everybody that wants to get through has to go all through these levels. All right, so step 4, does it, the next thing is, okay, I see a great level, I have a lot of protection, I want to write it here. The next step, does it pay a decent credit? If they're not going to pay you, don't take the risk. What you normally want to get is between 40 cents and 70 cents. Okay, I say this is a conservative sweet spot. You guys have been in my trading room know I have a tendency to do this. I will forego some profits to have more distance between my current price and where my short strike is. That's about right, Scott. I'm sorry, Scott. About even more, because the question is, what's the percentage? In the webinars, I said 80%. Okay, I tend to have a higher success rate, mainly because my criteria is not based on a mathematical computation as to how far it's supposed to be. Okay, I have all these different protection levels. I have logical trading reasons why I feel protected when I take on a position, and then because it's on a 60-minute chart, the distances are closer, so that we actually can get more money. Okay, we get a bigger credit. But if I'm being conservative, I'm looking between 30 and 50. There's sometimes you can get 75, 80 cents. I'll opt for the smaller number and move away from the short strike. Here's the trick to this trade. Okay, do not be too aggressive. I've seen someone come up and say, hey Dave, we can get $1.20 here. I was like, oh really? Maybe we're taking too much risk. Okay, be conservative. If you want a bigger credit, be willing and able to take a bigger risk and a lower percentage success rate. It's just a matter of fact. You take less credit, you get extra distance away from the short strike. There's extra protection, and there's a good chance if it goes your way at Friday open, you're going to get your money faster because you're further away. The option, the out of the money option, actually decays faster. What is the minimum probability out of the money that I take for the trade? I have no clue, Michael. I have no clue, because I don't trade out of the money option strikes based on their delta. I don't trade based on that. I put my short strike here at 605 because I have this previous high to protect me, this EMA, this EMA, this EMA, and then this high. That's my protective strategy. That's why I place it here, because there are times when, that's why I ask, does it give you a decent credit? Because you want the protection. If you can't get that protection and they're going to pay you 50 cents, I don't want it. If I reach for the protection but I'm only getting paid 10 cents, I don't take the trade. I don't have to take the trade. Okay? All right, trust me, I know I'm just throwing stuff at you and things like that, especially if you're new. So give me a chance. I'm going to show you how it's done. Okay? All right, this is step 4. Does it get paid a decent credit? If you're just starting out, look for these numbers right here. 30 to 50. Okay? It's okay. It's better to be a conservative. Okay, so right here, let's just say we have this short strike here. We can do the short strike here. We can do the short strike here. Okay? The closer you are, the more you're going to get paid. If I want to do it way up here, way down here, and this is the current price, and guess what? I'm going to get paid $1. Woohoo, that's a great trade, right? Yeah, if it works out, that's $1. That's your credit. Okay, up here, maybe you're going to get paid 60 cents. That's great. Up here, maybe you're going to get paid 30 cents. Okay? Now, for me, I go for this one because it is a higher probability that this price will stay away from this 605 level. Here at 600, maybe, you'll get to keep the 60 cents, but this is more likely to be hit. You're closer to the short strike. And this whole dollar right here, yeah, that if we break lower Friday morning, you made your dollar. If we start to move higher against it, you're going to earn it because the price is going to fluctuate a lot. Especially if you're a set it and forget it trader, be a little conservative in your placement. No, give it a try. Put credit spreads at all 3 levels. See how much you're going to get paid. Okay? And then make your decision. John, I'll tell you what that is too. Michael's question. Why do I usually get less? Because if you look at the physical distances, the price differences between the current price and the short strike, it still is physically much bigger. It's physically further away price-wise. On a 60-minute chart, the distance between the where you can write the credit spread and the current price, I can't give you a number, but let's just say it might be $5 to $7. Okay, that's on Thursday. On Tuesday, the difference is probably around 20 from where the current price is to what we're doing. It's a different time frame. That's why. All right. Next step, after you select where your credit spread wants to be, and you go ahead and then you receive your credit, the most important next step is managing your risk. Once you sell the credit spread, you want to determine where you're going to put your stop loss, whether it be mental or physical, like inputting a trade. Now, you can go to a 3 times maximum gain. I'll explain what that means. As a stop loss. If you are an active trader and you will be sitting there Thursday afternoon and Friday morning, it's okay to use a mental stop, but you better be watching it, okay? Because there may be an opening gap. If you're a set it and forget it type trader, go ahead and put your stops in now. Good question, I'm sorry. These credits are for a $5 wide spread. $5. Sorry about that. That's what I traditionally do. $5 wide. All right. So here again, decide on what level you want to set your stops. 2 times or 3 times max gain. Okay. Use mental stops or physical trades. Put in the stops now if you're not going to be watching it. All right. Here's the example. Last week, we did a $5 wide credit spread. We got 44 cents. What's my physical stop? I'm willing to take an $880 loss. That's a 2 times stop. Or you can do it closer to 1,200. There's nothing magical about the particular trade. You could do whatever you want. I'm just saying, it roughly 2 times or 3 times. Okay? That means that in order to get this, I'm willing to risk losing this. That doesn't make any sense. Don't worry. It'll work out over the long term. It does. You know, if you're familiar with credit spreads, what's the max loss? Is the credit $5 minus the 44 cents, so that the max loss potential there's $4.54. Yeah, you can do that. It doesn't matter. You don't have to say it's exactly $13.20. I'm just putting it on there. Here it's easier with CMG. The max I was willing to lose was 600 or 900. You'll learn. These are kind of rules of thumb. The main important thing is that you're looking not to lose the maximum you can potentially lose. Okay? If you are watching it, you put your stop in. And here, price line, max gain is 250. So what's that? 500 to 750. All right? I wanted to show you the idea. The reason why these are big numbers, these are 10 spreads apiece. If you're trading one contract, you're looking to earn $25 or $30 or $44. Now remember, I told you you can go from 30 to 50. Why not put it at break even? Because chances are at the open, when you put the trade on, you don't have this credit in your pocket. You're going to be sitting actually a little bit negative because of the bid-ask spread on the two options. If it works your way and you start getting some profits, then you can move to break even. Okay? All right, so you understand about risk control. Okay? If it's determine what amount of risk you're willing to take and have a stop loss, whether they be mental or whether you actually physically put it in there. All right? And I wanted to show you as an example what exactly I'm talking about. All right? Now, the value of the stop loss is based on the change of the underlying spread. If I have a 44-cent spread here and the value of it goes my way, and the value drops to 22 and I can buy it back for 22, I just made 50% of my max profit. I want this to actually go to zero. So I have 44 cents, but mine goes to zero, then I get to keep the 44 cents. Oh, did I forget the fifth step? Oh, yeah. How many number of contracts do you take? That's up to you. I don't know your account size, and I can't tell you how much to risk. They're $5 wide spreads. Each spread is worth $50 of buying power. I always advocate my traders, half to a third. That's what you use. I don't like to use more than that. All right, so the next step. Yes, you can scale out too, but don't want to make it too complicated. This is all happening noon on Thursday. All right, so you've gone through Thursday afternoon, nothing happens. Friday morning, what do you do? What's the most important thing? You watch your stock for a potential reversal gap. You're bearish and you gap up in the morning. You're bullish and you gap down in the morning. All right, if it is moving against you, watch the momentum and strength of both the stock and the underlying index. Okay? Watch the underlying stock and the index, because that gap may fill. It just might be momentarily weakness, and then it's going to fill and it's going to go your way. Because remember, we're still basing our trade on the 60-minute chart. If the momentum is moving very strongly Thursday afternoon in your direction, there's a good chance it's going to continue the next day. Okay? It doesn't the market doesn't just say time out. Okay, next day we're going to say which way do we want to go. You always look back, because the stock always tends to move in a certain way. So if it moves against you, watch for a potential gap fill. Okay? If the move at the open is moving in your direction, or if there is no gap, just maintain your position. Because guess what? Between Thursday and Friday, we had time pass. So time decay will very likely generate a jump in the profits in your positions at the open. Okay? If it's moving your way, if it's positive, or if it's even neutral. Okay? It closes at 100, it opens at 100. Guess what? time passed from Thursday to Friday, and then time decay in those options will likely generate a jump in profits. Wrap your mind around this. If you're the guy that bought the spread from me that I sold you, and it starts at 100 here overnight and then 100 here, and we're still pretty distant from this one, the strike up here at 120. Well, let's make it more realistic. 108. That's where it has to get to. If I open flat, is there a higher chance that we're going to go through 108 than if we gap up? Of course, there's a lower chance that we're going to go through 108 because we open flat. There's no energy going higher. We have to get that. So if we open flat, then time decay will be in our favor. Okay, the value of our options will drop so that we actually have increased profit in our account. Olga, question is, Olga's asking, what happens if the price gaps up through the resistance levels, all that protection, and hits your sold strike? There's a very good chance, barring any news events or worldwide calamity, there's a very good chance you didn't pick the candidate stock very well and you didn't read momentum very well. Because stocks usually continue a move. They don't just haphazardly jump. Okay? But the question is there. To answer that question, here, Netflix. Okay? We're generally bearish on Netflix. At the open, what do? We actually gap up almost like $3 or $4. Say my short strike is right up here. Do we panic? No, I put a line right here. We actually watch it for the first 30 minutes. And then if I retest that level right there, then I'll be out if I break through. We don't, and we don't panic, and then it just continues to drop. You're like, oh, Dave, we actually do come up. Yeah, but what happens between this time at 9:30 and this time at 12 o'clock? This is the AM period. And we've already burned through that. So I have my short strike right up here. Okay? The longer this has time goes by and it's going sideways to down, the less this spread will be worth, and the less likely we are to break through this level up here. Okay? Time is on your side. You just have to manage it well. If it goes against you a little bit, then you need to be careful and watch it, because usually you'll get a gap fill. Okay? If you get stopped out, if you get 3 times your max loss, get stopped out. Okay? Get stopped out, and no, you're not going to adjust it. That's not part of the strategy. All right? Now, last is the exit phase. Let me make sure. News and mergers, yes. I mean, when you trade stocks, you always have a certain amount of risk. Okay? There's something bad in the world that may happen that affects your stock. Carl Icahn can come on and say bad things about your stock, and all of a sudden it drops. Trust me, I used to trade Apple, and I'm in the middle of a trade. Carl Icahn pops up on CNB and wants to say something so that the stock of Apple will go up. All right? Just like, dude, shut up. You know, you're messing my trade. So that's why you don't commit all your assets into one trade at one time. Okay, you have your stops. You can take considerable precautions, but you can't protect yourself from everything. All right. Next step, final phase, the exit phase. We are moving into Friday afternoon. So you made it through the gap, and we're like Friday afternoon right here. What do? What you want to do is get the optimum exit. You want the spreads to expire worthless. That way you keep 100% of the premium and you pay no commissions. All right? If for some reason you make it through and it's 12 noon on Friday and you have 50% profits and you have to run out to the beach because it's in the middle of summer, can you take profits? Yes. Money isn't everything. It went your way. You have money that you can put in your pocket. Well, I won't get 8%. I'll only get 4%. Okay. A profit's a profit. If you can't watch it, if you can't sit there and that's your intent, then take partial profits. If not, move to a break-even stop. If not, sell half. If not, put a 50% stop loss in there so you get 50% profits. It's okay. It's up to you what you do. You have money. It's not a problem because you have money and time is moving in your direction, so you still have money. The question is what do you want to do with those profits? I would tell you, don't let it go back to break even is fine. A loss is not. Just don't let it become a loss. You already made it 2/3 of the way through the trade. Don't let it become a loss. Break even is fine. All right. Now, Thinkorswim has a commission-free exit, lets you close out of the positions. If it's like a nickel or something like that, you can close it out. You don't have to pay commissions. Commissions are expensive. Okay. That's why the optimum exit is letting it expire worthless. Okay. Let me see here. There's some questions because questions about exits and stops and everything always ask a lot of oh, sorry. Give me a second here. Mergers, 5-minute chart. Yeah, usually I watch on a 5-minute chart. It's fine. I usually use tick charts too. I don't care about the delta on when I'm buying and selling the options. That's not how I pick my short strikes, and I just continue to watch them. If there's a pre-market hint about Friday open, what should you look for? If the market looks really weak and you are bullish, you better watch your positions in case they move against you, if they're going to gap. But sometimes those things even turn. It depends on how severe the positions are and how strong and weak the market is. Olga, I don't know. I just continue to trade them through the market close at 4. Do I use the stock price for a stop loss? No, you do not. The stop loss that I put is based on the value of the option. Okay? Because what you're going to find is that the price of the underlying is moving, and it may actually move towards your short strike, but because time decay is also working in your favor, you may come out neutral or even positive. I've actually had days on Friday, okay, that, let's say this one, Tesla, we're at 200, okay, as an example, okay. My short strike is at 222. We're sitting at 200 Friday morning. 30 minutes into the trading day, we're sitting at 205. Okay? For the next 3 hours, we move up to 208. Okay? By noon, we're at 208. By 3 o'clock in the afternoon, we're sitting at 15. See, notice what we're doing all day in Tesla? We're moving up and up and up and up. I've had a day that I would watch that. We start out like 200, like this is $440. I'd have $300 profit, and we never drop below 300 profitability because this is Friday. We're crawling higher. Okay, by the time it's at 2:15 at 3 o'clock, the value of my spread is probably worth $375, something like that. Okay, it's closer, it's marching towards max profit. What can you do? Can you take that profit? Yes, I can take that profit if I'm worried. Okay, because you always have theta in your corner, but you want to watch the price of the underlying. But watch your profitability based on the value of the spread. Am I looking for stocks with high volatility? Yes, Dennis. That helps you meet the requirement of how much credit you're going to get. How do I select the candidate stocks? Tony, I have a list of 20 stocks that I normally go through. You can use this strategy on everything, but there's a very good chance that unless you have a relatively high volatility or a relatively high stock price, you're not going to get the credits that I get.
Not really.
Yeah, you can also look at the price of the stock, the option too, Linda. Yeah, Delta usually gives you a hard. It's almost sometimes if you're watching the Delta of the option, that's also changing a lot too. Friday is the most volatile day, and it's most volatile when the value of the stock is very close to the strike. Okay, if it's far away from the strike, it's a very, very boring day. You just sit there and watch profits, and they don't go anywhere. And last Friday, we spent most of the day watching our stocks at max profit. That's it. Yeah, I'll show you the list, because I'm going to actually show you individual stocks too, Cecile. How many weeks of the year are you able to find plays to do? You can do it 52 weeks a year. You probably have at least 1 or 2 stocks, maybe even more. It depends on how aggressive you want to be and how much money you want to commit. Yeah, these tend to be high volatility. Another thing that you need to make sure of is that they have a reasonable amount of option volume. You can't trade it if there's no options out there. Okay, that's why it's very hard to trade this particular strategy on, say, something like GE. If it moves a quarter in a day, and that's a volatile day, I'm just using it as an example, then it's harder to trade because you don't get that premium decay. You need the implied volatility. Okay, so you guys understand the final step, the exit phase. You want to get it max profit. You want them to expire worthless. If you can't sit and watch the stock in the afternoon on Friday, then you either move to break even, move your stop losses, or take profits. Either one. Okay. All right. Now this page is for set it and forget it traders. Okay, because in my description I said you could do this Thursday afternoon and then set it and then forget about it. Okay? What you need to do if you're a set it and forget it type of trader, you want to be a little bit more selective on your candidate. If you're actively trading it like I do, you can get one of those positions that are a little bit like, I'm not 100% sure, but I feel like it's going to go down. If you're going to set it and forget it, you want a better setup. You want more of those requirements, okay, before you get into a spread trade. You want an extremely crystal clear direction and momentum. Not momentum going sideways. You want momentum either going up or really going down. And going up or down right now when you put on the trade. You want a clear setup. You want a divergence. Do you want a double top? Okay? Those paired with momentum, very good setups. You want to know, am I bumping up against a high or a daily high or daily low? Am I bumping up a support and resistance level based on a previous high or previous low? Am I bumping up against a voodoo line? Be careful with that. Okay? Now, once you're clear on your candidate and saying this is a good spread candidate, I like the setup, I like it, I can get commissions, and it's reasonable, it's in that range, they're going to pay me the premium. Next is you got to decide your risk control. Okay? Because you're not actively managing it, it's important how you manage your stops. If your stop is too narrow, you can get stopped out early because you're not going to be sitting there and watching it. Once you put on the trade, then you actually have to put the stop loss in right then. Okay? If your stop loss is too close, and maybe it's like, okay, I can't afford it, so I can't afford a loss, so I'm going to do 1 times max gain. Okay? I can earn 50 cents, so I'm only going to risk 50 cents. If it's too narrow, you could get stopped out early on just a little wiggle. Okay? Now, if you're saying, okay, well, I'm going to give it a $5, instead of saying, okay, instead of 1 times max loss, I'm going to go to 4 times max loss. All right? Remember, these don't always work out, especially if you're not sitting and watching it. All right? If the stop loss is too wide, then your losses could kind of get too expensive. Okay? Especially if you're new. All right? And it's like, okay, Dave, well, that's bad. So main thing, stick to 2 to 3 times. If you really can't, if you're new, stick to 2 times max loss. You'll be okay. 2.5. Now you say, well, Dave, I can't afford that risk. Guess what? Reduce the number of contracts that you trade until you're saying that, okay, if you're trading 4 contracts and you say, I can't risk, 4 times, 2 times $50, then what? Then reduce your contracts, the number of spreads that you do, to 2. Okay? You just cut your risk in half. Okay? Reduce your number of contracts. Don't be too aggressive and trade too many contracts or try to get too much premium. Okay? You want the control that you have being a set it and forget it type of trader is the fact that you want to be selective. Being selective in your trade is very important, even more so than someone who's actively trading it, because they'll be sitting there on Friday morning. You won't. Okay? All right? And especially if you're brand new to this and you're going to be set it and forget it, do 1 contract. I can't tell you how many contracts to do, but I will this time. 1. So you get the feeling of the trade. If you have, you put this trade on 5 times and 4 of the 5 times you get stopped out, come talk to me. But if you're going to trade 1 contract, you'll be minimizing your pain. If you're going to trade 10 contracts, you're really going to be hurting. You better come see me. You're doing something wrong. Okay? You're new to this, do 1 contract. I can say that. 1 contract, and then you'll come back to me and complain and say, Dave, you know what? I ran it 5 times. I made money 5 times. You told me to do 1 contract. I could have made a ton of money. Like, congratulations, you're doing it right. Increase it to 2 contracts. Do it 5 times and then let me know. And then you go on, so on and so on. You guys know, those of you who know me, that's how I trade. Become better at what you do. Grow your trading slowly. I think one of my traders is going to call the compliance police because I advocated 1 contract. Thanks, Kevin. Hagriva, I honestly don't know because I don't trade set it and forget it. Because I manage the options room, I don't trade this. But I know most of the time, if we get the underlying right and the candidate right and all the requirements meet, we have a very, very high success rate. Okay? Sometimes it's boring. Same thing, Anthony. If you do this, some people ask, how do you do this in an IRA? Same way. Even more so, I would suggest start small. Okay? Maybe even paper trade it. Paper trade it, get used to it, show some success, and then once you start trading real money, trade small. Okay? You have 52 chances a year to do this. Every single week. So there's no reason to rush and try to catch the next one for some sort of blockbuster return. 4 to 8% a week is not going to, rip higher in a month. But you do this consistently over a year, 2 years, 5 years, you will be well set. Okay? All right. So one other bonus. Those of you that can't trade during the day, you can still trade this strategy. It's just harder. Okay? It's harder and you may not have as much growth. I'm not saying you can't trade it well, but it's the exact same strategy. But instead of looking at a 60-minute chart at 12 noon on Thursday, you need to look at it at the end of day on Wednesday. All right? And because you can't trade during the day, you have to put those orders in Wednesday night, Thursday morning. Okay? If you can use limit orders. All right? Because a limit order actually will do this. If you put a limit order and you're trying to get 30 cents and it moves away from where you're supposed to, you're not going to get filled. So it's fine. You'll be okay. But you can also use an order. You get filled at 30 cents, it automatically kicks on a stop loss. So you'll be okay. All right? You need to be able to do both. If you can't do that, you better call your trading desk and ask them how to do that. Premium is pumped up in the morning. Premium is pumped up based on which way it moves. It's based on it should decline because theta is working in your favor. It may be actually a little bit less. Would I do this stock? Good question, Barbara. The question is, do I do a stock like this that's going to report earnings? Heck no. I'm not John Carter. I don't trade iron condors on earnings. That's a different story. Now, John has some pretty good trades. Trust me, I used to be in his room. All right. The one other thing about this can't trade during the day modification, you actually have an extra period that you're exposed. Thursday morning. Okay? It's weird because with this strategy, time is working on your side. The point is, you don't want to be exposed. You want to minimize it while you still get the same credit. Okay? So it's a 14-hour trade. Not a... Is that right? 14 hours? Like a 13 hours. 6.5. I don't know. I must have added wrong. 13. Do I put this strategy on my room on Thursdays? Yes. Have been for about a month. Joe, yes, everything's recorded. No problem. I'll take care of you. Oh, did I misspell? Sorry. All right. All right. So that is it. Any questions? All right. Bye. No, just kidding. It is straightforward. You just need to follow the steps. Okay? That's the most important thing. You have to follow the steps. And you're like, oh, Dave, I'm not sure if I get it. Here's what you do, okay? You go back through and you go through all 7 steps, okay? You must practice this till you can see it. Now, I'm going to go through some stocks with you live, but you need to go through the steps, okay? Go back and take a screenshot of every single step. Okay, and then review the examples that I now do with you for the next 30 minutes here or so, however long. Okay? It's after you've done it a couple of weeks, it's very easy. But you want to follow the checklist just so that you don't miss a step. Okay? Again, most important thing is, especially this time of year, you can do it every single week. Don't do it on anything with earnings. That's a good point. Thank you for asking that question. All right? All right, so let's go ahead and look at stuff live. How soon will the recording be posted for later viewing? Randy, I'm going to try to have it up by hopefully mid-morning tomorrow. I'll have it all processed, but they have to put it into the value chart system that makes it available to members. Yes, Linda. Linda brings a good point. These are weeklies. Hopefully I'm sorry. Sometimes I forget that sometimes people get confused. I only trade weekly options, especially when they expire. It's the last 1 to 2 days until expiration. So I would assume that you know that is the weekly option that is expiring. So this Thursday, the weekly option that I'm going to be doing this trade on are the ones that are going to expire on August 1st. How do you save money on commissions? After you do this trade a couple of times, talk to your broker. Say, I'm spending a lot of money on commissions and this other company's offering me a better rate. What's the best rate you can give me? Okay? Again, the recording will be up tomorrow at noon, and you should be able to log in to valuecharts.com with your username and password, and you should be able to get a copy of the recording. If you have any questions, you can always contact support@microquant.com. I put it into the chat box. Let me copy this again. Our support person's name is Min, and he is happy to help you. Okay? Let's talk more about the strategy, okay? Because it's still fresh in your mind. I'm going to erase all those annotations, okay? The stock list here on the left-hand side. Hey, Bill, these are the stocks we always follow, sir. Do I ever use indexes whose expiration is about to expire on Thursday? Not really, Randy, because you don't have... I found you can't get the premium there because it's almost the implied volatility of the index is not as much as the individual stocks. Walter, ask me at the end, because one other thing too, if you're still newer to options trading, I'm saving any more fundamental type questions for the end, like which options should I use, what's a weekly option, what's a credit spread. Those questions, don't worry if you don't know the answers, but we'll do it the final Q&A, because I want to get through the application of the steps so that our more experienced traders can kind of get it and get what they need first. Bill, why do I use TOS? Because I was an options trader before I was a futures trader. I prefer their spread interface. I wish it was like a sponsorship and they paid me, but it's not the case. All right, so here, Netflix. Let's start with Netflix. The stocks that I follow: Apple, Google, Amazon, Tesla, Priceline, Netflix, LinkedIn, Baidu, CMG, Win, Biogen, GMCR. Some of these other ones I kind of don't. I used to do more. But those 15 or so right there are primary ones. And usually you can get 2, 3 of these spreads all the time. They meet my criteria. They're big in stock price. The spreads pay well. I have the fine level of control as to where I put my spreads. Okay? Where I put my spreads. These funny looking dots, support levels, these are voodoo lines. That is an indicator that I use, and I'm looking forward to bringing that potential indicator to my trading room. I'm just working it out with the creator of Voodoo Lines. They're beautiful. All right, okay, let's look at a 60-minute chart. Now, I can't draw the pretty levels like before, but I have all these little dots and stuff. So I actually do not do this strategy on Apple, not anymore. It can give you a sob story because I used to trade Apple every single day. The stock split really destroyed it for me. But as an example, we can see, first of all, 60-minute charts. Let's just work through the steps. Step 1, 60-minute chart. Let's check momentum for direction. Momentum is going down. The squeeze is going down. So the direction of this credit spread I want to play is to the downside. That is called a bearish call credit spread. Where were prices going? Prices are going down. So if prices are going down, where do I want to sell my stock? I want to sell it up. See if this works. Oops. Where do you want to sell it? I want to sell it in this area up here. Ooh, it works. Okay, that's where I want to sell it. So where am I looking to put my short strike? Well, I have one top here and one top here. I want to do it right around this area, maybe around 100. And that would be fine. Okay? That's where I want to do it. Is it going in the same direction as a daily chart? Not really, because this is still going up, but the close at the bottom of the bar, that's actually good. So maybe I can still be bearish on Apple. Next two, look in the past couple of days. Do I have any support and resistance level? I have this previous high and this previous high. And the 8-day EMA, the blue line, gives me protection from stock moving higher. So I'm okay with taking this trade. There's a change in momentum. Yes, momentum is going lower. Okay? This could be considered a bearish divergence, by the way, or a double top. Not the prettiest, but it is there. Okay? Now again, we were looking for active protection. We mentioned this previous top and the EMAs. That all works well. The voodoo line is up here, so it's not giving me extra protection. But I have this. This is actually now the high of today, and that gives me protection from the short strike going higher. Okay? Each of those is a level. Here's the high. There's a level right there. Here's another high. There's a level right there. So if we want prices to go up, it's got to go through all those levels to go higher. Hopefully that kind of makes sense. Barbara, I'll have to talk about voodoo lines later on. Ask me that question later.
I guess not.
Next step, okay, we've got all those protections. It's looking going down. What kind of credit can I get? And this is where it kind of falls short, because it doesn't give me much credit at all. Okay? It's probably giving me 10 cents, if anything like that. And it's not in my realm. The main reason why, the price is small now. The price is small, and the differences between the strike prices is relatively weak. They're very small, so I'm not getting much of a credit. Even if I got a decent credit, I would have to buy a lot more contracts because they're so much cheaper. Okay? All right, so that's step 4. Let's just say, as an example, it does pay a good credit. Now, say it gives me 20 cents. Once I get 20 cents, I can put my stop losses in, and my max loss, if it's a 20-cent gain, is anywhere from 40 cents to 60 cents. That's the max loss I'm willing to take. Okay? Now, what will I do if this is Thursday night and it gaps higher? I'm going to watch it to see if it has the potential to break through 100. If it does, I'll get stopped out. If not, I'll hold it and I'll wait to see if there's a gap fill. Especially if momentum is still down. If this squeeze is still down. Because even with a gap move, usually the momentum picture stays the same. And this is a longer term chart. It has a bigger effect on the gap and the potential gap fill than if it was going in the opposite direction. Do I look for a certain ATR? Cecile, good question. Yes, I do, but I've already pre-screened it for you. You'll eventually get a good handle on if it's a good candidate or not. Mainly because you keep trying. You step in here and you're like, okay, I'm going to try Visa again. And you try Visa every week. The setup you get all the way to step 4 and you're going, wow, it's not paying me a decent credit. Okay? Notice before we look at what it's going to pay us, we look to see if the setup is good. Do we have support and resistance protection? Do we have momentum going lower? If you have all those things, that's when you can check if it's worth it. You have to have the setup first. Okay? You'll be pleasantly surprised. Sometimes one of these that you're doing, the credit that you're going to get is a lot more than you expect. And what I try to do is actually move my where I'm going to do it further up. Move it away. I'm not hyper aggressive on getting a really big payout on Friday. I like to get that 30 to 50 cents, and if it's paying me a lot, they're paying me a lot because of a reason, so I'm moving back. What time of day do you need to check this entry criteria? 12 o'clock on Thursday. If you can't do it at 12 o'clock on Thursday and you're going to put your orders in, you can check it Wednesday night. Try to do it Thursday morning. You can't do it Friday morning. Friday morning, because you're trying to get the time decay from Thursday to Friday. Okay, here's the date line right here. This is Thursday, this is Friday. That's when you get a lot of time decay. You have to do it at 12. The setup is for 12 noon. It can be 11:30, it could be 12:30, but noon on Thursday. All right? Once you get your position, say, hey, they're going to pay me 35 cents. That's fine. Get your position, set your stop loss, either a mental stop loss or a physical stop loss, an order in place. What do you do if it gaps up against you? Let's say in the morning, we gap up, we actually move higher back to this previous high right around 99. Watch it. Watch what happens in the first 30 minutes. Now, if it gets on a horse and starts to run, then be careful. Go ahead and stop out. But if it just comes up, hits that resistance, and it bounces, and the market starts to weaken, and we start to fill the gap, guess what? Hold on to your position. Remember I told you that on Thursday going into Friday, theta kicks in really hard. So even if the stock moves against you a little bit, there's a good chance theta is going to overpower that, and your position will actually become positive even when the price is moving against you. It's a balance between time and price. And trust me, on Friday, if Delta stops just for a second and it starts to move your way, theta will really just run smack dab over it, and you'll see your profitability jump. Okay? Remember, traders are the ones that manage the expectation. And the fact is, if all of a sudden we look like we're going higher, moving against that short strike, and all of a sudden we stop against resistance, we turn around, we start to go back, then the traders are expecting not to reach that level later on today. Okay? It looks like it's going to continue to fall. All right? So risk management, step 5, put your stop in. Okay? Step 6, Friday morning, watch how we open. Watch, do we gap up? Does it move against you? If so, mark the high and the low. Okay, if it breaks through the point where it's going even more against you, get stopped out. That one's not going to work. If you gap up or moves against you, watch for a gap fill. Because when you get a gap fill in your favor, it's a beautiful thing, because not only is the price moving in the direction you expected, but time decay just really kicks in, and you become really profitable. Okay? If it's going your way, hold on. That's it. It can really move two ways. It can move against you, it can move sideways, or it can move for you. If it's going against you, manage it. If it's going sideways or in your favor, it's both cases are still profitable. Isn't that really cool? So one third of the time it's going to move against you, 2/3 of the time it's going to move in your favor. Okay? That's the benefit of letting time do what it's going to do. And then last but not least, Friday afternoon, stop short strikes way up here, price is way down here. What do? You watch it until expiration, till you hit 4 o'clock, and then you have max profit. If you're going to not be able to watch, put a stop loss in, even break even, or lock in some of your stops. Okay? If you're set it and forget it, put it on, put your stops in, look at it Friday at 4 o'clock. That's the main thing. Don't trade too much size if you can't watch it. What if the morning gap pass your 3 times mental loss? Good question, Michael. Still watch it. I can't tell you where you should take your stops. Okay? If it's 3 times your stop, there's a probably an even chance it may continue against you. So you go ahead and take the stop. It all depends on what happens in the first 30 minutes. Okay? Here's a tip. If the stock is running higher and the market is flat, you may have a problem. If the market is up and the stock is up, then there's a chance that the market may just open higher and then fill that gap. The gaps in the markets usually fill, unless it's a runaway gap. But most runaway gaps occur on Mondays. Okay? Thursdays and sometimes on they don't, and then Fridays they usually don't either. The stops are based on the loss in the underlying, in the option spread. Okay? Because that's what I'm willing to control. I want to control what my loss is. Okay? But I am watching the underlying stock to see what the price action is, because that dictates whether or not it'll control what happens to the value of my spreads. The winning strategy, it depends on what you're talking about. If it's actively managed, Dennis, it's a higher percentage, it's around 80%. If it's set it and forget it, it's probably a little bit lower, towards 70%. Mainly because you can't actively manage it. Okay? Now, that's my winning percentage is actually higher. But the trick is, it depends on the trader. It's not always completely based on the setup. It's based on the trader. Michael, you may need to talk to your trade desk. I may be able to show you, but the problem is the market is now closed. So it doesn't actively accept all those orders. But I know Toss's trade desk is actually very good. Right? Let's work through it again, guys. Let's work through it again. Let me see if I can... I'm not going to sit here and cherry pick a particular one. I'm not going to do Google because Google's a mess. I mean, Amazon's a mess because of the movement in the stock. I think I did Google already. Let me just see. Here's one. Now, Netflix I can show you because it's a little bit kind of all over the place. All right? So we live in a perfect world. Right? First step, look at a 60-minute chart. Yeah, it looks okay. 60-minute chart. All right, let's check momentum. Okay, look at the squeeze. It's actually been going down. It's been going down, going down. It's actually red here. Look, I'm sorry, the squeeze is actually going down, these two bars. Momentum is going down. This was green. Now we get shorter and shorter. Now it's red. Okay? So which direction is this thing going? It's going down. Right? So yeah, okay, it's okay to trade this to the downside. The next is, let's look at the last 2 to 3 days. Right? So here's 1, 2, 3 days. We've been going lower and higher and now generally lower. All right? Do we have like a double top? Not really. This is really separated. This looks like more like a channel. Okay? But we did have a top that hit 429 right here, and here 429, this general area. So maybe 430 would be a general area, because remember, we're bearish. We think this is going to go down. Momentum is changing to the downside. So in these last 20 bars, the most likely direction is down, and we have this previous high and this previous high. So we have a double top. Okay? So we have a double top, bearish divergence. Now, let's just say with that double top, where do we want to put our short strike? Let's put our short strike right around here. This is $430. So we want to put it right in... Hold on. It doesn't... TradeStation is a pain sometimes. Now we do have this voodoo line. Let's just say it's 435. Okay? Give me a second here. 435 is where I want to put my short strike. Okay? There, that's how I normally show it. 440 was the previous one. That's why it's still on here. 435. So here, I'm coming down. Momentum is down. Double top. I have a voodoo line here at 431.93. So guess what? I'm going to put my short strike at 435. Let's just say because it's Netflix, expensive, it's a little volatile, I can get 30 cents for this trade, this credit spread up here at 435. It's good. So you go through the checklist, step 3, and trust me, you'll have the checklist from the screenshots. And that's where I was going to put it. Does it pay me a decent credit? Well, I said you could get 35 cents. The sweet spot is between 30 and 50, so I'll take it. I like the setup, so I'll use the normal number of contracts. Maybe I'll do 10. Okay? That's step 4. Now risk management. If I'm getting paid 35 cents per credit per spread, then I'm willing to risk 70 or maybe 100 or $1 per spread. Okay? So that's anywhere. I'm willing to get $35. I'll risk $70 loss, upwards to $1 loss. Okay? Knowing that where price is down here, the price is going down, my short strike is way up here, and I have all this resistance for this price to go higher, and I only have to hold it for 11 more bars. Okay? And then Friday morning, I'm going to watch to see if we gap. If we do gap, I'll watch this previous high and this previous high. Does it provide resistance? It comes up, it hits that double top, and then it rolls over. I'm holding through Friday afternoon for max profit. Yeah, sorry, Tony. I've been showing you a lot of negative ones. It just happens to be that's the market we're in. It doesn't matter. It works the opposite direction too. I'll try to find you one example going in the opposite direction. Let me just see. Could the price of the stock go past this option strike without stop being hit? Yeah, Richard, I've heard that, sometimes if we have that gap, you may get past the 3 times max loss, so you need to watch it. I don't know. I usually set it with a stop, and then it goes to market. So if it goes through the stop price, it should turn into a market order. I don't use a stop limit. Okay. The question is, do a stock work in going in both directions? Yes, absolutely in both directions. How much would you need in my account for 10 spreads in Netflix? Well, this particular one, I'm willing to play this as a $5 wide spread. So the buying power required is $500 per contract. So if I have 10 spreads, that's $5,000. $5,000 with the potential to earn $350, $400. Depends on what kind of credit you get. It's not bad. It's like 8%. What is this magenta moving average? This magenta moving average is actually my 50-day or 50-hour moving average. That's what that is. How do you know how much you get paid on the option? By looking at the chart. Shahan, I'm just giving you a blank answer. I can't do the actual computation. The market is closed. But out of my experience, I'm just giving you the example. You actually have to try. Once you get the setup and you say, this is a good candidate based on momentum and support and resistance, and I want to do my short strike right here at 435, the only way to know how much you're going to get paid is put it into the computer. Put it in the computer and see what the going rate is. What's the current credit? If it meets your requirement, then go ahead and get it. If it's not enough, you can consider moving a little bit closer to this price if it makes sense. If it doesn't make sense, pass. Look for something else. If I need to put a stop and forget it, what stop do I put for 3 times? Well, here's an example. If I got a credit for 50 cents, 1 times loss would be $1. 2 times loss would be $1.50 because, okay, 3 times loss would be $2 because the difference between the credit and the stop would be $1.50, which is 3 times the 50 cents. Okay, it's whatever the credit is plus however much. 1 times is the same amount. 2 times is like 3 times the amount, and 3 times is 4 times the amount. I know it's a little confusing. What about risk getting stock put to you on the credit spread ever? Usually that would have to go against you. And I don't worry about that as much because you're only in there for 11 hours. Would I ever consider a larger spread to get more premium? You can, Linda, but Yeah, that doesn't, what matters most of all is where you put the short strike. However much exposure you're going to, if it's a $5 wide spread or a $10 wide spread, it doesn't matter to me. Okay, what's important in terms of the trade is how far away from that, what's the likelihood of getting that short strike and the price getting pushed through it. Okay, if I do a $10 wide spread, I do half the number of spreads. It doesn't matter to me. If we do not have the voodoo lines, can we still take it? Sure, Andrew. It's fine. Voodoo lines usually line up very nicely with other highs and lows, support and resistance levels from a previous distant past. So if you don't have it, you don't have to have the voodoo lines to do it. You have this double top, this high, and that's at 429. That's a very good resistance level. Okay, why? Because this is a previous high. This is a daily high, and this is a daily high. Okay, on a 60-minute chart, most of these spikes in price tend to be the daily high, or here, this is the daily low. Okay, daily highs and daily lows are very good support and resistance levels. How do you put voodoo lines on a toss chart? Michael, that's actually a proprietary indicator. People in my trading room, I'm trying to get it for them. If the credit is not enough, would I considering it to a $10 wide? Keep in mind the credit that I'm quoting you, like 30 to 50 cents, is on a $5 wide spread. If you just widen the spread, you really should be looking for a credit that's anywhere from 60 cents to $1. Okay, just because you widen it doesn't, because what you're doing is you're increasing your risk. Okay, you need to make sure that you're getting paid a suitable credit for the amount of risk that you take. Okay, a 5 to 10% gain on a risk is what you try to aim for. You don't say, okay, I'm trying to get 30 cents, so I'm going to make my spread wider. Well, you just doubled your risk. What are those these dots? This is MQ trend, and this is like acting like a parabolic SAR. That's a nice resistance level also. You see, that's why I picked 435. I have a voodoo line. I have two double tops. I have a double top level. I have the 8, the 21, and the 50 period moving averages. Again, the voodoo line and MQ trend dots. That's a whole ton of resistance to get this price through 435. That's my defensive line in terms of football terms. That is my defensive line. And if you want to get to my quarterback up here at 435, you have to get through all those levels. Okay? All right. Any more questions, guys? Here's what, again, let me run through it one more time. I'm going to put the steps up one more time. You've seen me apply it. I want to go through the steps one more time so it makes, okay, step by step. You've seen me explain it once. I've tried to show you. I also showed you on some live examples, but I want to go through it one more time while it's still fresh in your mind so that when you go through the slides, you can visualize what I'm saying again. Okay? Because you've been exposed to it a couple of times. All right, step 1. Look at a 60-minute chart. When? Thursday at noon, plus or minus 30 minutes. Check momentum's direction and strength. Whatever you use for a momentum indicator, use that, MACD or MQ momentum. If you have the squeeze indicator, watch how the histogram bars are behaving also. Okay? Whatever you need to do to check momentum. I use momentum a lot in the shorter term time frame. All right? If it looks good, hey, take a quick peek at the daily chart. Is the daily chart also moving in that momentum direction? If it is, great. That's another positive in terms of your trade. Okay, so that's step one. 60-minute chart, momentum direction, double check the daily. All right, I'm not going to go through that and do it again, but the next step, once that looks good, let's look at the last 20 bars on the 60-minute chart. Okay, you still have that chart up, right? 60-minute chart, last 20 bars. Look for some setups. Is there a double top like we've seen? Is there a double bottom? Is there a bullish or a bearish divergence? Okay, any of these setups that will help you say, hey, momentum is going higher, the setup is also showing that. All right, if I'm thinking it's going higher, I'm looking for a double bottom. Okay, if it's in a sideways channel, was it in a sideways channel and now it's breaking higher? There's a reason why I check momentum first. Okay, if there's momentum already moving and you have one of these setups, maybe in the just most recent past, that gives you strength in the fact that the momentum is moving in that direction. That's one reason why credit spreads are easier to take than directional trades intraday, is because you don't have to catch the divergence or the double bottom right when it's happening. It can already have happened, and the effect of it is moving the stock in a different direction. You can still take advantage of that trade. Okay? Again, looking for a change in momentum based on one of these setups. That's what you want to see. Can you use stochastics as momentum? As long as it's giving you the direction. I need to read the momentum. I don't need to know if it's overvalued or undervalued. That doesn't matter. Not on the stochastics. On the value charts, it kind of does. I actually want it to be overvalued or undervalued based on Barbara, not right now. I'll show it to you. Yeah, we can do that. You're asking me to review the 60-minute charts that worked out. Yeah, you know what? Give me a quick second here. Oh, no. Let me work through all the steps and then I'll show those to you. Next, 3, look for those active protection levels. All right, did the price action, did the create support and resistance? Do we have a double top providing resistance or a double bottom providing support? Okay, is there a daily EMA, maybe a 8-day EMA or a 50-day EMA that we can take off the daily chart and put it on the 60-minute chart? That helps provide support and resistance. If you have the Voodoo Lines indicator, take a look at that. Maybe you can use one of those as protection in case that the value of the stock moves against you. And then, again, daily highs and lows. That's easy because that's already on the 60-minute chart. Okay, look for that active protection. Next, once the setup looks good, the next question is, show me the money. Is there a decent credit? Normally you want to try to get 40 to 70. You can usually get that. But the sweet spot that I like, that gives, when I say it's a sweet spot, it's enough distance to the short strike that you feel comfortable, but you still get paid enough that it's worth the risk. Okay? All right? Don't be aggressive. Don't be aggressive. Don't look for a huge credit and think you're going to make really good money, because the bigger the credit, there's bigger the risk. Somewhere along the lines, there's some sort of risk involved. All right? If you take less credit in this sweet spot right here, you're going to get the benefit of an extra distance between the strike and the current price, and then usually that includes extra protection. Extra distance is extra protection. Maybe you have an additional support and resistance level or an additional EMA, something like that between you and the short strike. Okay. All right. So right there, risk management. Once you have the nice setup, you put the order in, you get the nice credit. What do you do? Once I sell the credit, you determine the risk. What is, you're willing to take 2 to 3 times max gain as your stop loss. All right. If you are actively watching it from Thursday noon to Friday morning or Friday 4 o'clock, it's okay to use a mental stop. All right, but be watching it. If you're a set it and forget it trader, put the stop in right now. The moment you get filled, put your stop in right there. A stop is not the end-all, be-all, worst thing that could ever happen. The stop is like a trip line. It's protecting you. It goes off in case you're not paying attention, or just something to say, hey, look, trade went against you. You can reevaluate, and then you have the potential to get back in the trade. Okay? As an active trader, you always have that. As a set it and forget it trader, you just pass and wait till next week. Okay? If you have 2 to 3 of these, and you have a 2 times max gain loss, and say all 3 of your credits are about the same, well, you get tripped up on one, you still have one of your trades that works in your favor. So you still come out a little positive for the week. It's not a bad thing. It keeps you from getting hurt at max loss. All right? Friday morning. Say Thursday afternoon, you're just fine. You don't get stopped out. Friday morning, watch for a potential gap. Gap happens maybe 1/3 of the time. If you gauge your momentum right, there's a good chance that there will be a gap fill in your favor. If gaps against you, watch for that gap fill, because the momentum strength was already moving in your direction. So there's a good chance that there's a gap fill. If there's a gap or the market, if there's a positive gap in your favor, or the market is neutral and goes sideways, pay close attention. You probably get a quick jump in profits at the open. Okay, so 1/3 of the time, maybe it'll give you trouble. 2/3 of the time should be okay. Jahan, I will answer that question in a little bit. Thank you. Right, next step, phase 7, exit phase. If it's going your way, you want to keep it until the spreads expire worthless. Again, you may be blessed with a really boring Friday, okay, in that the market is really quiet, doesn't go anywhere, and basically you sit at 100% max profit pretty much all morning and all afternoon. So you just watch the market and make sure it doesn't go any crazy distance. If you're sitting there at 60-70% max profit, it would make a good trader's choice to move your stop to break even or lock in some of that premium, lock in some of that profit. Okay? If example is, if my max profit is $300, okay, and say by Friday noon my current profit is $250, okay, so I'm waiting on that last 50. What you can always do is move a stop so that you'll get stopped out if it goes down to a $100 profit. Okay, so let's say you get stopped out and then you just make 100 instead of 300. But guess what? You still made $100 because this started going against you. You don't want to lose all your profits and actually turn this gain into a loss. So you're just saying, okay, I'll lock it in at 100 and just move on to the next week. Remember, this happens every single week. So you get a positive week, positive week, 3 positive weeks in a row, and then a break-even week. It's fine. With next week, positive, negative, positive. Okay? It's fine. It happens sometimes. So what you want to do is maximize your gain. If you cannot watch it into the afternoon, partial profits are okay. That's what I mean by this right here. Let's just say you're sitting at 250, you can't watch it, then go ahead and take the 250. If you can watch it but you're a little nervous, cut your position in half. You have 2 contracts, sell 1. Okay? But the optimum exit is to let it expire worthless. That way you have no commissions. Okay? So that's what you want to try to do. That's the 7 steps. Okay? And again, if you're a set it and forget it trader, keep your number of contracts low and make sure you pick the best candidate. Okay? None of the iffy ones. If you can't trade during the day, you use the end of day on Wednesday 60-minute chart, and then make sure you put your stop losses in there. Make sure they work. Make sure you talk to your trade desk. Make sure they work. Okay? Let me do something really quick here for Barbara. Barbara asked a good question. Can I show you what the charts look like last week on those trades that worked out well? Let me see if I have those again. All right. Please ask any questions that you may have. All right. Here, Google. This is the 11-hour trade from last week. Okay. Google last week. It is a bearish call credit spread at 610. All right. So last week, give me a second here. So we've traded 2 days this week. Tuesday, Monday, Friday, Thursday, Wednesday, Tuesday. Here. This is why I picked 610. 1 high, 2 high. Here's a double top. This is a bearish divergence. We start to fall. This is the point in time right here. You see how momentum is going down. So the short strike I picked was 610. We managed. We do a little bit of trouble here, but at the open. But we gap down very quickly, and then we just proceed lower here. Okay. Here's where you actively. Wait. This is Thursday. My bad. I'm sorry. I'm thinking Tuesday because today's Tuesday. Tuesday, Monday, Friday, Thursday. Good. And then this makes better sense because I was like, why didn't I get stopped out here? Here's the first high. Here's actually 1 high, 2 highs, 3 highs. This could actually be an extended head and shoulders pattern. And here is Thursday noon. Notice how we have no upside momentum and the squeeze is going lower. It's pretty easy to say, hey, Google is going lower. So where am I going to put my short strike? I have this high and I have this high. Okay, that's a double top. Put my short strike up here at 610. The credit spread that I was able to get, 35 cents. Okay, what happened on Friday? Here, this is where we closed at 602, 603. We actually gapped down $2 and we proceeded to go lower. This is what I mean. It was boring on Friday. It just went lower. Okay? If you open lower in the direction of your credit spread and when you put this trade on, you'll see a big jump in your profits. I really think by end of the trading morning, we were at max profit pretty much on Google. Next is Tesla. This is Tuesday. This is Monday. Here it was a little bit different. Here's Friday and here is Thursday. So you can see the squeeze was going up a little bit. Momentum was going a little bit down. The one thing on Tesla had a little bit different type of setup. My bullish put credit spread was at 215, way down here. Okay, so I had a couple of different things, probably on a daily chart, but still, my short strike was way down here. The main other reason is this. I actually had a trade from Tuesday that I was bracketing, but the 11-hour trade worked in that favor too. That's why I picked the short strike that was really far away. I told you that's why I didn't get paid much with this particular one. But I could have been more aggressive and gotten paid more because you had a double bottom right down here. Could have put the short strike at 218 or 215, but I went for 215 further away. Oh, 215, and that's why I got paid only 10 cents. I could have done it at 217 and a half. Okay, maybe even 220, but that's more aggressive than I want to be. So we have 1, 2, 3, 4. It's right here in the middle of the day. And you can see it just continued to move higher. See what happened at the end of the day on Friday? It actually moved a little bit towards my short strike. But because we only had 2 hours left, I was sitting very close to max profit by 3 o'clock on Friday. It's only $100. Okay? And last but not least, Priceline. Oh, this is Thursday. From Tuesday, Monday, Friday, Thursday. Now here, what did we have? We had actually prices coming up. This is momentum is actually weakening. You can tell from the histogram bars. This move higher right in here. You can see there is no upside momentum, even though we got this big spike. And I think I got into this a little bit later, but we spiked higher, but we closed the bar lower. And momentum never got into the green, so this is a bearish divergence. I wasn't worried about it because my short strike was extremely far away. It was at 260. The main reason why is because this is price line, and the options tend to be expensive and wiggle around a lot. I could have gotten it closer, like in this area, and I could have gotten a really big credit, but instead I opted for the distance, and I ended up with just a 22-cent credit. Okay? But you can see, after that spike, what did we do? We fell, and momentum going into the close on Thursday was going down. Here, we actually gapped up just a little bit, and we closed the gap and proceeded to go lower. So by Friday, we're way down here. Short strike is way up here, and the difference is almost $35, $40. This thing was a max profit probably by noon on Friday. So those are, and those were the good setups. I did scan the other ones to see if there were any other setups, and it's fine. Now someone's going to ask me, Dave, these are iron condors, right? Yes, they are iron condors, but they were legged in at a different time. This was done on Tuesday. This is done on Thursday. Tuesday, Thursday. This is just done on Thursday. Netflix, I looked at it. They didn't have a good bullish put credit spread to take. So actually, I took 2 bearish call credit spreads last week in Netflix and made a lot of money. Okay? I hope you can give us a couple of trades for next week's on Thursday to see this method in action. This is what I can do for you, Michael. If you're not currently, are you currently a subscriber to the trading room? Okay, here's the deal. Okay, you can go to value charts, and here is an offer I want you to consider. Go to our blog. Now, I already know you spent $49. I already know you spent $49. So our premium membership is worth $97 a month. I can't just give it to you. I got to make you pay something for it. Now, for a month, you can try the platinum membership for $7. So that way, you have 30 days or 4 weeks. You can come and see the Tuesday trading. That's from 3 to 4. You can also see the Thursday trading during the day. Okay? From 9 o'clock until 1 o'clock. But again, when do we put the trades on for the 11-hour trades? Right around noon. So Thursday at noon, come by. I would probably get in there about 11:30. That way you can see the trades. Okay? $7. That's a really good offer. Okay? Just keep in mind, the workshop that you just attended, that thing's well worth over $100. This thing's worth over $100, especially if you can pull in trades like this. Okay? So your commission cost on your first spread is probably going to be more than $7. So this is for a month. Just go to valuecharts.com and just click blog. That's the clearest place I know that the membership button is right there. Okay? How much after a month? It's $97. Now, the reason why it's $97, because we actually have 2 trading rooms. We have both futures and stocks and options. And you get access to both. Here are the live trading rooms. One's futures, and then here's me in the options. You go back and forth. I have traders that used to pay for both rooms when they were full price. Now it's $97 for both. But don't worry about that. I'm not here to sell you that. I'd much rather that you take the information I've given you, apply it. If you want to see it in action and see what trades I take, try it out. Try it out for $7. Okay.